What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. So I have some real estate investment trusts for you guys to check out for June. I have 3 of them right here. I've been reading about these guys in the news a lot. They are high yield real estate investment trust, 3% or above. One of them may surprise you, and I want to know what you guys think. So again, we are at 9,200 subscribers strong. So you guys are amazing on this dividend investing channel. And I provide you dividend investing strategies. So after you subscribe, make sure you hit that notification bell. Make sure you smash that like button. I'll see you in the comment section after this video. So let's check these REITs out right now. The first one I want to go over is Gaming and Leisure Properties, GLPI. It's sitting at 47.29, has a dividend yield of 5.96%, PE ratio 21.53, average volume 1.40 million US dollars. The market cap is 12.04 billion US dollars. G range is 41.81 to 51.46. Stay range is 46.89 to 47.37, and its previous close is 46.63. So what do I like about these guys? Their portfolio consists of 55 geographically diversified gaming and related facilities and amenities well positioned across the nation. So right here, as they say, their portfolio is 55 premier gaming assets is geographically diversified across 17 states. Their tenants include Penn National Gaming, Caesars Entertainment, Boyd Gaming Corporation, Casino Queen, Bally's, and Cordish Companies. Through innovation and proven management team that pioneer the gaming REIT space, we have leveraged a wealth of industry knowledge to deliver consistent year-over-year total shareholder return while enhancing the strength and stability of our diversified portfolio and premier gaming assets. We expect to grow our portfolio by pursuing opportunities to acquire additional gaming facilities to lease to gaming operators through the triple net lease arrangements. We also anticipate diversifying our portfolio over time by acquiring properties outside the gaming industry. The expertise and industry knowledge of our management team will allow us to secure additional avenues for growth beyond the gaming industry and allow us to pursue other acquisitions that may prove complementary to our existing assets. So I'm going to go over their portfolio real quick. So I'm on their website and I'm going over their portfolio. You can even see it on their website. So I'm just giving Ohio as an example. They have Hollywood Gaming at Mahoning Valley Racecourse. In Toledo, they have Hollywood Casino. Columbus, they have Hollywood Casino in Columbus. Hollywood Gaming at Dayton Raceway. And Tropicana Evansville. Louisiana, it's pretty big right here. Lake Charles, this Baton Rouge location. Broomtown, New Orleans, that's got to be big. Hollywood Casino Gulf Coast. Right here, they have Hollywood Casino Gulf Coast again. I'm going to be right in New Mexico. They have the Zinc Park Casino. I'm in Colorado. They have Bally's Casino. That's a big one. I've seen friends on Facebook post with that. They have the M Resort. They have the Tropicana Laughlin. Jackpot Properties. So looking at these locations, they're very strategically placed. Look at St. Louis. They have the DraftKings at Casino Queen. Man, they are heavy in St. Louis. And St. Louis is a tourist spot. Naperville, Illinois, they have the Hollywood Casino. It looks like they're another casino. Maristar East Chicago. So they're pretty well, even in Plain Ridge Park Casino. Looks like in Massachusetts, looking at the map. In Jersey, they're pretty heavy too as well. So location wise, gosh, they have one in Maine as well. Hollywood Casino. I think they're well diversified location wise, and as a gaming and leisure property, they're always making money. Okay, they have the landlords have to pay. They need to get their money, and people have to pay their landlords. So, these guys are booming and popping. It doesn't matter if there's a recession or that potentially could happen. People are still going to gamble their money like crazy. I mean, gambling is a sin. I consider this a sin stock and a very popular sin stock. And I'm going to show you their revenue and their dividend history real quick, which makes these guys very strong as a high yield dividend stock and including a high yield real estate investment trust. Check this out. I really have said to myself, why have I not bought these guys yet? I really am. And this is one I should probably buy. Don't, quote me on that, but this is one definitely on my radar. Look at this revenue in 2015 in millions US dollars. 575, 2016 828, 2017 971, 2018 1055, 2019 1153, 2020 right at 1153, and then 2021 it's 1216. So from 2015 to 2021, that is a huge jump in revenue. And people have to pay their landlord. And remember, real estate investment trust, 90% of what they pretty much make come back to us as investors. So, I don't have time for for owning real estate. I'm in graduate school. And by the way, they just gave me extra points in my exam, and now I have an A in my class. So I got to keep that A. And they're just going to generate revenue. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. These guys are a huge steal right now. And I'm going to go over their dividend history. I'm going to show you these guys are back on the attack with their dividend. So 2014, they were 52 cents. 2015, they cracked 55 cents. Then 2016, they cracked 56 cents. Then they hit 60. Then 2017, 62. Then 63 cents. And then 68 cents in 2018. 2019, then they cracked 70 cents. Then 2020, you see that little slash in their dividend. So they, cracked down to 12 cents. Then all of a sudden they're back. So look at this. 60 cents, then 65 cents, then 67, and then they cracked 71 cents. So 2020, remember, right when the pandemic hit, they were at 70 cents, and now they're at 71%. So right now the payout ratio is 80%. Now again, they, EPR properties, they cut their dividend. I mean, that's kind of expected in this type of sector in real estate with gaming and leisure properties and entertainment. So they're backing on the attack now. According to Zacks, they're 6.05%. It looks like they're right around the 5% though on other websites. So if you bought one share, you made 282, and their dividend increases in the last 5 years is 7. Now again, the dividend growth in 5 years, it looks misleading at 1.15%, but they're hiking their dividend. They're back and on the attack. Their revenue is going up, and they're coming back strong post-pandemic. So let's check out the next dividend stock. This dividend stock has taken a major beating since the pandemic. AvalonBay, AVB is a symbol, has a dividend yield of 3.26%, a PE ratio of 24.30, average volume 807.26K, market cap 27.26 billion, year range is 183.35 to 259.05, day range is 193.70 to 195.49, and its previous close was 194.02. So there's a major dip right now. What are these guys about? So AvalonBay is an equity REIT, has a long-term track record of developing, redeveloping, acquiring, and managing distinctive apartment homes in some of the best U.S. markets and delivering outside risk-adjusted returns to shareholders with equal parts experience and vision. We've established a leadership position rooted in building value for the long term. So let's check out their portfolio. They have locations in California, heavy in California, Northern California, Southern California, Colorado, Connecticut, Washington, D.C., Florida, Maryland, New Jersey, Massachusetts, New York, Virginia, and Washington. So these are people that have some money. And my gosh, the portfolio in California is high. Southern California and Northern, especially Southern California. So that's kind of their location-wise, strategically in big cities. These are big cities. I mean, New York and Massachusetts, they're very heavy in those guys as well. Probably bigger than Northern California based on all the cities. Now I'm going to show you their revenue and their dividend history. And revenue-wise, they're not jumping up too fast, but still they're pretty solid with the revenue. This is in millions US dollars. 1,856 in 2015, 2016, 2,045, 2017, 2,158, 2018, 2,284, 2019, 2000, 324, and then 2020, 2000, 301, then 2021, 2000, 294. So that's kind of, those big cities kind of had the lockdowns a little bit, and were pretty heavy with the restrictions with the bug. I don't want to say the bug, if you know what I'm talking about, but they were very restricted in those cities. Mayors really wanted people not to move, be close or social, they wanted heavily to socially distant. My state of Ohio, things opened up a little bit more faster for people compared to these big cities, especially California and New York and Washington, Massachusetts and all them. So that's one thing to take into consideration. But I see them rebounding with an increase in revenue. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. And I'm going to show you their dividend history. So let's start in 2012. They're 97 cents, 2013, 107, 2014, 116, 2015, 125. And then 2016, 135, 2017, 142, 2018, 147, 2019, 152, 2020, 159, and they're right at 159. So their payout ratio is 74%. Number of dividend increases in the last 5 years is 3. Annualized dividend growth in 5 years, 2.61. So if you bought one share, you made 636 with a 3.28% dividend yield. Still, it's down. I have seen a lot of articles regarding these guys, and many people are capitalizing on the dip. So I just wanted to point this one out. Let's jump to the final dividend stock. Many people have been capitalizing on the dip in innovative industrial properties. So these guys are a real estate investment trust. They're kind of a new kid on the block. People that have the Mary Jane farms, they're a landlord to them. So they have to pay these guys money. They have to pay their landlords money. And this is why I think this is one of the best Mary Jane stocks out there, because you're actually getting something out of it. And instead of people that want to go into MJ stock or what's the other one? Is Kronos or all these other ones, trying to take a big risk and gamble. You're going to get something out of these guys. They're way down. I sold these guys for a profit. I'm probably going to rebuy them. The dividend yield is so attractive right now at 6.03%. The PE ratio is 23.98. The average volume is 270.00K. Market cap is 3.25 billion US dollars. Its year range is 107 to 288.02. Major dip. Day range is 113.03 to 116.12, and its previous close was 111.48. So these guys are a huge steal right now. Now I'm going to go over their revenue and their dividend history. I don't want to go over their portfolio in depth, but they are acquiring like farms like crazy. And I'll just show you an example. I know this one was back in December, but them acquiring 100% leased portfolio of 27 properties in Colorado, Pennsylvania, and North Dakota was huge for these guys. And they're starting to acquire more and more properties. So people that like the Mary Jane and stuff, in stocks, this one, I like this one the best out of all the cannabis stocks. This is probably the best cannabis stock out there. It is a real estate investment trust that you cannot say no to. And again, GLPI and IIPR, I have no idea why I'm not buying them. They're a high yield, and I'll show you the revenue on IIPR real quick. So here's the revenue of IIPR. This is in millions US dollars. 2016, 0.267. 2017, 6.42. 2018, 14.78. 2019, 44.66. 2020, 116.89. And then 21, 204.551. That is a huge increase in revenue from 2016 to 2021. I really see the future bright with these guys. I just need to know and tell myself, when am I going to buy these guys? So that's the most important thing. And I'm going to show you their dividend history. Let's just start in 2019. It was 35 cents. Then it cracked 45, then 60, then 78. Then it cracked $1. Then 106, then 117, then 124, then 132, then 140, then 150, then 175. So its payout ratio is 97%. Big deal. They're kind of new. Number of dividend increases in the last 5 years is 13. Annualized dividend growth in 5 years is 65.98%. If you bought one share, you made $7 and you get a 6.27% dividend yield. So let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will post a video tomorrow for you guys. But let me know which one you like best in order between AVB, GLPI, and IIPR. I'll see you guys in the comment section. And again, if you're new, hit that notification bell after you subscribe. These videos are free for you guys. Take care and have a great Thursday.